What is up, YouTube? Welcome to Finastic Trading. If you are a trader and you have been facing problems in your trading and are not able to generate consistent profits, you are at the right place. So, in today's video, we are going to learn a new strategy which is based on a really popular indicator called as Bollinger Bands. So, the students at Finastic Trading have been using this strategy and are making consistent profits since years. So all you have to do is watch this video till the end. Do not skip any part because you might miss some important points. So watch the video completely, make notes, backtest the strategy yourself, and then implement it in your trading. So without wasting any more time, let's get straight into the video. So as you can see on the screen, we have the indicator applied. So if you don't know how to apply the indicator, all you have to do is go to the indicator section and search for Bollinger Bands. So this is the one you want, not this strategy, just Bollinger Bands. So when you apply it, this is what it will look like. So the Bollinger Band refers to nothing but the bands. The band at the top and the band at the bottom. It is basically a price channel on the chart to represent volatility range. So now let us break down the indicator. So the two bands, and one at the top, one at the bottom, the blue color bands are nothing but standard deviations. And the orange line in between is a 20 simple moving average. There are a few things people use this indicator for. One is to identify trend continuation, if the trend will stay intact or it will stop and reverse. Other is finding breakouts. Third is consolidation, if the market or the price will consolidate in between a zone. The fourth one is the contradictions and expansions. So whenever the bands are coming together, this is what we call contradiction. It implies is the volatility is decreasing. And whenever the bands expand or move away from each other, this means that the volatility is increasing. One more way is using these zones as overbought and oversold. So the bottom zone is called as oversold zone and they will look for buys at this point, and the top zones are called as overbought. So people will look for sellings at this point. So let us understand the top and the lower band, which is nothing but standard deviation. Deviation is a number expressing how much the value of price differs from the mean value. You don't have to focus on it. Let us just go into the settings of the indicator and understand what it is. So when you set the standard deviation to 1, it is already on 1. You can see the price is going out of the Bollinger Bands. So whenever you set standard deviation as 1, the price will stay inside the Bollinger Band 65% of the times. Other times it can break the zone. If you set the standard deviation to 2, now the zone is a bit widened and you can see that price is more likely to be in the zone. But still there are some points where the zone is broken and the price will trade outside the zone. So whenever you set the settings as 2, 95% of the times the price will stay inside the zone. Now let us change it to 3. Now as you can see, the price is mostly, almost all of the times it is inside the zone. So we are going to use 3 as the standard deviation because 99% of the times the price will be between the zone. So you will know that this is a strong support and you can look for buys at this point. And also the upper band is the strong resistance. You can look for sells at the top points. There is one more way that people use this indicator. So whenever the price breaks the SMA, the 20 SMA, the middle line, they will buy here and set the upper band as the target. Other way is whenever it breaks on the downside, they will sell here and look for the lower band as a target. But what we are going to do is find a new method which will work most of the times and make you consistent profits. So before going ahead, SMA, let's talk about the SMA, the simple moving average. So it is nothing but it will act as a rubber band for the price. As the price moves away from the rubber band, it will come back within some time. As you can see, it goes up, it will come back to the SMA. So now let us move on and learn the methods which we are going to use to trade this indicator. So the second way to trade this indicator is trading it with the trend. So as you can see over here, what most of the traders do is they will do the same thing. They'll buy here, find the target, sell here, then again sell here and look for the target. Now what happened here is it reverse from this price, hit the stop loss. Why did this happen? It is because the dominant trend is a uptrend. It is not a consolidation zone like in the previous case. So in such cases, what you do is buy at the bottom or the pullbacks. So this is a pullback. Again, it touched the zone. This is a pullback. It almost touched the zone. This is a pullback. So in an uptrend, you will look for the touches and only go for buy. You don't sell in an uptrend because price action will always lead. So this is the second method to trade. One more key point to be noted is whenever the Bollinger bands move away from each other like this, they have moved away really fast. What you can expect after this move is a consolidation. As you can see, the market will consolidate after such a widening and the parallel bands will be formed. So this will again act as a zone. Now here is a consolidation. And now comes in the last method to trade this strategy is the breakout. After a consolidation, as you can see over here, whenever the price breaks the upper side, you go for a buy because the volatility is really low and with time it will increase and break out in some direction. In this case, it broke out the upper direction, so you look for a buying opportunity. If it goes down and breaks the bottom side, we'll be looking for a selling opportunity. Another example for the consolidation is here. This is also known as squeeze strategy. We look for breakouts in this strategy. So as you can see, there was a huge consolidation over here. Now, if you remember the first trading method, you have to buy at the lows of the Bollinger band and sell at the top of the Bollinger band. So there is the previous way of trading this. So you can find multiple trades in this zone, and after some time, whenever it breaks out the zone, we apply our squeeze strategy. So this is where it broke the zone. Then in previous case it broke on the upper side. In this case it broke on the lower side. So we will look for sellings. As you can see, we got a huge rally after this trade. So that was all for today. If you didn't understand any of the points, you can just write it down in the comment section. We will get back to you as soon as possible, or you can go watch the video again. This is our Instagram page where you can find good quality content which will help you improve your trading. Also, if you have liked the video, please subscribe to our channel. This will help us grow and deliver more quality content